Good morning. I hope everyone is feeling very energized for this morning's talk. It's delightful to see people joining. I know it's early on a Wednesday morning, as always, but we're very pleased to see you here for our EU clusters talk. Now, today we are going to talk about money. It's always very important, and we're going to look specifically at about the development of funding for EU clusters. Now, of course, traditionally there has been lots of public funding, but today we're going to look a little bit more about the whole landscape of financing, specifically venture capital, corporate partnerships, other funding models. And we'll have a look at what's possible. We've got a great lineup of panelists as always. So we're calling today's discussion Private Capital, Big Impact. So hopefully everyone is there with lots of ideas. The agenda, as always, we will start with the news from the European Cluster Collaboration Platform. We will then have a presentation during this morning from DG Grow from the European Commission. We're going to look at what they are saying about what's feasible and how we can access different channels of funding. We will also have a presentation on venture capital in the European Union from Invest Europe. They know an awful lot about what's feasible and what the direction of flow is in terms of funding in general. Then, as always, our panel debate. And finally, we will wrap up, as always, with the funding opportunities looking to the future. We always have the funding opportunities, but today it will, of course, be more relevant than ever. We're going to use Slido. We will launch a couple of polls to get everybody involved and ask questions of what everybody thinks. So try and get yourselves ready to answer those questions. It's not scientific, but it is a really good conversation starter. Use the Q&A function, as always, to ask questions of our panelists, and always the chat function. Now, in the chat function, we will share links. We always invite people to say hello, tell us where you're joining from, and have a general discussion happening there alongside the panel discussion that's happening. If you'd like to join in, do raise your hand. We will give you the floor. You'll be invited, if you wish, to switch on your microphone and or your camera. If you do so, for GDPR reasons, as always, I remind you that this session is being recorded and will be used to be shared in the future on the European Cluster Collaboration Platform. So it's not Chatham House rules. We are recording this, but that's absolutely great because it means we will be capturing all your thoughts for future feedback. I'm going to hand over now for our latest news to Angela Negrete-Benedi, who is from the European Cluster Collaboration Platform. Angela, tell us, what is the latest news?
Hello, good morning, Jennifer, and good morning, everyone. Well, we are starting with the extended deadline for applying to the next Cluster Booster Academy. As you know, it will be in different formats. We have 3 online training sessions, one coaching session to be scheduled individually, and 2 days, 3-4 March 2025, hosted at the Warsaw University of Technology. This is a very interesting opportunity, which is going to provide you learning skills for cluster managers. It will support cluster management teams and contributing to European policies and programs, and it will help developing better policy. Don't forget that the deadline has been extended until 23rd of October. We are also reminding you to save the date for the upcoming cluster SMIT regions. The next appointment will be in Charleroi in Belgium, 27-28 of November. We invite you to join this opportunity, which meets local, regional, and national levels, bringing together clusters and policymakers. And it is to facilitate the implementation of good practices and promote the collaborations between clusters and different stakeholders for the industrial development of the regions. We have also another deadline, which is 20 October, for giving the response to this STEP initiative funding research, whether you have experience with the initiatives, with the programs covered by STEP or not. Your voice, your opinion is crucial. It's very important for the European Commission, and therefore we are inviting you to respond to this funding research. And at last, we also want to remind you that you can save the date for the upcoming Ukraine Investment Conference. It will take place in Warsaw, Poland, 13-14 November. and it's an investment conference towards recovery and close integration. It is organized by the European Commission and the government of Ukraine as part of the fourth Rebuild Ukraine International Exhibition in Warsaw, and it will mobilize private investment towards Ukraine recovery, reconstruction, and modernizations. We are giving you the links in case you want to attend. And also don't forget that there is the opportunity to make part in the matchmaking sessions for both EU and Ukrainian businesses. Thank you, Jennifer.
Thank you very much, Angela. Of course, the links are, as always, in the chat. So click through to those if you're interested in any of those sessions. We're going to turn over now to our colleagues in DG Grow at the European Commission. And then it's Eva. Are you there? Can we see you? Let's have your camera on because I'm sure everyone is very interested to know how Invest EU works.
Yes, good morning. I'm here. Good morning to all.
Thank you so much. It's good to see you. I'm going to hand over the floor to you. Tell us all about it. We're really interested.
Thank you very much. So my name is Albena Taneva. I work in DG Grow in the Investment Directorate in the Access to Finance unit. And our DG is the policy chair of the SME window of InvestEU. So today I will give you a broad overview. What is InvestEU? How does it work? And what are the products that we particularly deploy under the SME window? So if I can have next slide, please. Yes, so what is InvestEU? It's the Commission flagship program in this MFF to finance the green, digital and sustainable transition. It's a guarantee instrument, which means that we dispose of a budgetary guarantee of 26 billion euros. And we do guarantee equity and debt investments of the financial sector all over Europe. We don't give grants. That's an important point to make. We guarantee really equity and debt financing to public authorities, SMEs, universities, startups, any kind of beneficiary that would like to finance a project in our scope. We have one umbrella program which gathered 13 EU-level financial instruments that were active in the previous MFF. Why so? Because we were quite often criticized that we have too many instruments with different legal frameworks, with different state aid regimes, eligibility criteria, monitoring, reporting, and that was contributing to quite a big complexity of implementation. So in this MFF, the InvestEU program is gathering all of them under the single roof, and it is composed of three pillars. One is the InvestEU fund, which basically is the budgetary guarantee underpinning and de-risking investments in the EU economy. The second pillar is the advisory hub, which is a helping tool to assist project preparation that would later on benefit from the fund. And last but not least, we have an InvestEU portal, which is the meeting point between investors and project promoters seeking finance. With this 26 billion budgetary guarantee, we need to leverage and to attract other public and, but above all, private investors in the economy and to mobilize over 370 billion euros of financing across Europe, and 30% of it at least needs to be climate dedicated. Next slide, please. So we have four policy windows. As I mentioned, we in DG Grow are the policy chair of the SME window. The budgetary guarantee, you see how it is distributed on the slide. We dispose of 6.9 billion euros. The biggest policy window is the sustainable infrastructure one, which typically supports large projects in the area of transport, renewables, energy efficiency, etc. We also have a research, innovation, innovation and digitalization window, which is meaning to finance really the innovative projects of startups and scale-ups across Europe. And also we have a social window with a bit smaller capacity, which is financing health, social microfinance investments. Next slide, please. Advisory Hub, as I already mentioned, it's the helping tool to prepare projects which later on will benefit from the fund. So we can have advisory support, capacity building, different trainings. We can also have market studies which are helping to see where there are investment gaps and whether investments should be addressing. Next slide, please. And the portal is amazing points. It organizes regular matchmaking events between those project promoters seeking to find finance and also the investment opportunities that InvestEU provides. Next slide. So how does it work? It's a bit of complicated scheme, but in short, we do not, from the Commission, deal with final recipients directly. We use financial institutions. We conclude with them guarantee agreements, which outline the eligibility, which products we want them to deploy, what parameters we want them to achieve, KPIs, reporting, auditing, monitoring, all the legal framework and the policy narrative of what we want to support. Then these institutions their end can either support municipalities, SMEs, larger companies directly, or they deploy what we call intermediated implementation model. They select on their end financial intermediaries that could be other commercial banks, could be national promotional institutions, guarantee societies, microfinance providers, or venture and equity capital management. And they also provide the support to the final recipients. 75% of our guarantee is reserved for the European Investment Bank Group, which means the European Investment Bank and European Investment Fund in Luxembourg. And the other 25% of the InvestEU guarantee capacity is reserved for international financial institutions like EBRD, Nordic Investment Bank, Council of Europe Bank, and national promotional banks of the member states. Next slide, please. And next one. So just a couple of words to conclude what are the products we have under the SME window. So for SMEs, we work almost exclusively with the European Investment Fund. It publishes call for expression of interest for financial intermediaries because according to their statute, they support SMEs and they work in an intermediated way, which means that the EF does not support SMEs directly, but goes through financial intermediaries. So interested financial intermediaries can apply to an open call for expression of interest and all the details are published on the EF website. Next slide, please. So with the EAF, we have several guarantee products. First of all, we have a competitiveness guarantee product, which is meant to generally improve access to finance of SMEs, either because they are too risky or because they operate in segments which commercial and other financial institutions normally would not touch because the risk would be high or they are just excluded according to their policies. Or because they are often asked to high collateral or the conditions to access financing are not that favorable. So with this product, we de-risk the investments of the financial intermediaries, and as a result, they provide better conditions to SMEs and lower the collateral, lower the interest rate, provide longer maturities, or simply go into sectors which have been excluded before. We have also an innovation and digitalization product, which, as you can judge by the name, is supporting innovative investments and investments in digitalization of SMEs, but also small mid-caps. We have also a product dedicated to the cultural and creative sectors, and meant to improve access to finance for those that are active in this area. And our novelty product for InvestEU is the sustainability guarantee, where we are financing companies that want to become greener, more sustainable, to transition to circular economy practices, more climate friendly investments, and last but not least, those companies that are already deemed sustainable but want to continue their existence and financing. Next slide, please. In terms of equity product with the EF, we have also several possibilities. We have a general equity financing where we are aiming to complement the capital markets union and provide more equity support to startups, innovative companies, fast-growing ones, and strengthen their solvency. We also have enabling sectors product, which is meant to finance areas like space, defense, life science, health tech, deep tech companies. We have climate and environmental solutions possibility that would be circular economy, energy efficiency, sustainable transport, food tech investments with a strong environmental component. And lastly, we have a digital and creative sectors component of equity, which is financing investments related to artificial intelligence, quantum computing, cybersecurity, etc. My last slide would be, yes, on the access to finance, how companies can see where they can address their requests for funding. We in DG Grow are maintaining the so-called access to finance website. It lists all the financial intermediary in a particular member state or a particular region, which are active with deploying EU-funded mandates. And companies can check who are the financial intermediaries active in their respective country or region. They can search by funds, they can search by type of support as well. And that's how they have an idea where to go and ask for funding. Thank you for your attention, and open to questions if you have any. Thank you.
Absolutely. Thank you very much, Behnaz. I know you're going to stay on for our entire meeting. So if people do have questions, they can put it in the chat or in the Q&A, and we will hopefully be able to get you back to answer anything really specifically on Invest EU. We're going to turn now to Invest Europe, and we will hear from Lucrezia Losordo, who's the Senior Research Officer at Invest Europe, looking at the presentation on the venture capital in the European Union, because Invest Europe is representing private equity across the EU. So with my other hat on as a reporter, I've written a lot about Invest Europe. So I'm interested to hear, Lucrezia, your presentation to tell people within the clusters what's available and what might be useful and interesting to them. So over to you.
Thank you very much, Jennifer, for the nice introduction. Hello, everyone. Good morning. I'm Lucrezia from Invest Europe, indeed, and today I'm going to present the VC ecosystem in Europe, how clusters interact between each other, which are some current barriers to cross-border investment, and a few key action points, actions that we should take in order to enhance long-term growth. Next slide, please. Yes, here you can see what I will talk about today, but first I would like to say a few words about Invest Europe, who we are, and how we collect data. Next slide, please. And the next one. So we are an association based in Brussels representing Europe's private equity, venture capital and infrastructure. And we have over 650 members all over Europe. And they are split quite roughly equally between private equity, venture capital and also limited partners. Next slide, please. And we collect data ourselves. GP submit data directly to us through the European Data Cooperative Platform, which is a joint initiative which is not only owned and operated by us, by Invest Europe, but also by other national associations. And our data is considered very reliable also because of how we collect data, which is directly through the GP, but also because we have a very skilled team of analysts that check every single data import. Next slide, please. And now I will move to the center of this presentation. I will show you some highlights and results that we managed to obtain thanks to our data and also in collaboration with the European Investment Fund. And the things I'm going to present right now are taken directly from our latest report, our latest VC factor. Next slide. So in this report, we geolocate startups and VC firms according to their city. And then based on the city, we created the functional urban areas. A functional urban area, or VC hub, is just a city and its interconnected suburbs. Why? Because it's important to consider not just the cities per se, but cities and the suburbs together, because they form a cohesive urban region where not only social and economic factors play a vital role, but also the interactions between the entire VC hub with other VC hubs. And we managed to classify 613 functional urban areas. Next slide. And through a network analysis, the first thing we did was to analyze VC hubs, origin and destination VC hubs, so origin from a VC firm point of view and destination from a startup point of view in terms of volumes. And here in this, let's say, ranking, you can see the pink column indicates the VC firm, so the money outflows, and the blue column, the startups, so the money inflows, investment in the VC hub. And it's interesting to point out that the top 10 origin hubs are responsible for almost 70% of the total investment distributed, while the top 10 destination hubs account for 51% of the total investment received. And this means that the startup environment is more sparse across Europe compared to the startup environment is more sparse compared to the VC firm environment. And another interesting finding is that 2/3 of the total investment volumes involve two different hubs, even if in most of these cases, these two hubs were in the same countries or quite close between each other, even if they were in different countries. Next slide, please. Another metric we took into consideration is the centrality. So the number of connections, and here it doesn't matter the investment volumes, but just the number of connections that a VC hub has with other VC hubs. And something positive that we found out is that between 2007 to 2021, the number of connections increased, which means that the ecosystem is growing. And in terms of investment stages, we found out that early stage network is more interconnected than later stage network. And in terms of sectors, there are two sectors that, let's say, have a slightly different behaviors compared to the other ones. The first one is ICT. ICT has more reciprocated connections. A connection is reciprocated when the money flows from VC hub A to VC hub B. So from VC firm in this located in a specific city to the startup located in another city and vice versa. So from a VC firm located in city B to a startup located in city A. And biotech shows higher transitivity. Transitivity is another key measure that we use in the report, which basically means that if an investment goes from city A to city B and another investment goes from city B to city C, the probability that city A also invests directly in city C is higher. And this is something specific to the biotech sector and the biotech ecosystem. Next slide, please. I will go quick on this slide because I would like to focus on the next one, since it's basically the same one, but this shows the origin hubs, so the VC firms, and the next one will shows the startups. So I will focus more on the startup, but anyway, this is here for reference. So next slide, please. Here we used another metric, which is the IVI, is the integrated value of influence. And this is a metric that combines 6 different centrality scores. Why is this relevant? This is relevant because here we do not only consider the number of connections or the investment volumes, but a sort of other centrality scores in order to create this ranking. And it's very interesting because there are some cities such as Zurich, number 4, or Hamburg, number 7, which are in the top 10 only because of this metric, only because of the IVI. But they are not the cities that receive the highest amount of investment, and they are not the ones with the highest number of connections. However, isolating Zurich, for example, or Hamburg, so removing them from the ecosystem, would highly damage the entire VC hubs environment. And this was a very interesting finding, thanks to this analysis. Next slide, please. So now, after these considerations, now let's see which are still the cross-border, let's say, barriers in Europe, and a few action points that we should take into consideration in the near future. And indeed, in June, we published the foreword, which contains our 12 priorities for the next 5 years. Next slide, please. So we managed to summarize, let's say, the barriers in 3 main points. The first one, by no surprise, is that it's not easy for fund managers to fundraise and invest cross-border. The second one is that the current rules that we have in the European Union disincentivize long-term investments by pension funds and insurance. And the third one is that we do not have enough programs for talent mobility and the digitalization of Europe. Next slide, please. So just to give you a little bit of context in terms of this first point, between 2019 and 2023, between 2018 and 2023, only 3.6 billion was invested cross-border. And here, I mean between countries in Europe. And this represents just 27% of total VC amount invested in Europe. And even if there are current rules that enhance fund managers to operate cross-border, apparently these rules are still not enough because there are still barriers. And the problem is the following one. The problem is that the average VC fund size in Europe is lower than the average VC fund size in the US, simply because the access to capital is more limited. And to be precise, in Europe right now, it's 22% lower. So what should we do? The first thing is to conduct a study in order to understand which are the legislative and monetary barriers that prevent investors to fundraise and invest cross-border in Europe. The second one is that we should create a system where investors can opt in EU supervision for funds that would like to have a pan-European strategy. The third point is that we should enhance the European supervisory authorities with a new structure and with additional tools to harmonize the regulations in Europe. The fourth point is that we should also widen the existing passporting rule, the existing EUVECA regime, to allow more funds to be included and to be classified as EUVECA funds in order to allow all venture and growth funds. In this way, they could support more startups, but also scale-ups, because it's important to not only consider venture, but also growth. And the last point is about taxation, because this has always been a powerful instrument. So we should aim to the creation of a uniform withholding tax system so that investors do not have to deal with 27 different tax systems. Next slide, please. So the second priority, the second barrier, sorry, is to include more funds from pension funds and insurance. And here it's important to mention a few data once again, which is the fact that in the US, 11% of the pension funds portfolio is invested in private equity, venture capital, and infrastructure, while in Europe is just around, I think, 4%, 4.3%. And for insurance, it's even lower. It's just 2% in Europe over their total portfolio. And we aim to increase these percentages in the next 5 years in order to arrive up to 10% of their portfolios for pension funds and up to 7% for insurance. And again, these are still conservative numbers, conservative percentages. But doing so, we would unlock around 570 billion euro that could be invested also cross-border. Next slide, please. And the last topic is about skills. By no surprise, in Europe, we do not have enough programs for talent mobility, and we are losing talent because in the last decade, 30% of startups relocated abroad. So what we aim for is a startup visa so that we could attract foreign entrepreneurs to establish their business in Europe and to expand their business in Europe. We aim for more programs for young people to boost entrepreneurship skills in schools, universities, or through startup incubators, mentorship programs, and other initiatives. And the last point is it's promoting tax incentives for investment in not only in startups, but also in scale-ups. And next slide, please. With this, I arrive at the end of my presentation. If you have questions, feel free to ask them through the chat or at the end. Thank you.
Thank you, Lucrezia. And again, you're going to stay on for the rest of our conversation. So for the next 45 minutes, you will still be here to answer questions if people have them about Invest Europe. And I think a very interesting final point from Lucrezia, of course, skills and talent very much going hand in hand with funding. I'm sure something that will come up on the panel. We will turn now to our Slido questions. You can join by going to slido.com on your browser or sli.do. You don't have to download anything, or if you have your smartphone handy, you can scan that QR code on the screen. If you go to slido.com, do put in private funding as our hashtag for today. So the first question: what kind of skills would a cluster need to facilitate its members' access to private finance? If you've been watching the last two presentations, you should have a strong idea that it's a skilled workforce, but we're also interested to hear other ideas and thoughts of what you think would really help to unlock that capital that is essential to doing the good work that all our clusters do. We see private funding. Okay, so that's just one thing that you need access to. Other skills, I see there's participants typing. We'll wait for a few minutes to let people get their thoughts on their screens. Okay, deep knowledge of its members' needs and financial literacy, as well as connection capabilities, expertise. I think those are key things. They relate to skills, but also really very much relate to being good at what you do, which I think is also the need for how you unlock the sources of funding. If you're even not a cluster, it's certainly one of those things that everyone needs. Any more participants? I see, well, we've got a few more participants typing, so I will wait until we see what they're saying. Guarantees of knowledge. Again, all about the skills, about the knowledge, about the understanding of their ecosystem, I think it's fair to say, because somebody else is saying members in this area. Business case creation, that sounds interesting. Maybe we'll talk about that a bit on the panel. Understanding of venture capital and the startup funding journey, which is obviously helpful if you want to unlock that venture capital. I think we will talk more about those questions on our panel as well. One last person typing. We'll see what the comment is, and then we will move on to our next question. Business case creation, connection capabilities, deep knowledge of members' needs, understanding the VC world, financial literacy, private funding, knowing of members in the area, guaranteeing knowledge and expertise. A lot of those things all very, very, very interrelated. Let's have a look at the next Slido question. Knowing what to offer in the cluster. So again, all around the same thing. The main challenge your cluster faces when facilitating access to private funding for your members? We've got that. This is a multiple choice question. So, is it a lack of awareness about the members' needs and potential investors? Is it about the attracting investor interest? Is the biggest challenge a mismatch between funding opportunities and member needs? Is it difficulty in demonstrating return on investment or scalability? Or is it insufficient networking with potential investors? Please vote on that, because when we've got 100% for two of them, I'm guessing that we still need a few more people to respond to the poll. So that's a quick poll that you can just click the response to. Okay. Let's see if a few more people want to vote on that. For now, it's not difficulty in demonstrating ROI. Nobody is saying that they're not able to demonstrate return on investment. So that's interesting, because it's obviously about other areas. It's a little bit about attracting investors' interest, and it's a lot about networking. And of course, those two things are interrelated. For the rest, a mismatch between funding and a lack of expertise or a lack of awareness, all of those seem to be less of a concern. So we will bring that to bear on our conversation. And we'll have a look at our final poll, which is, what kind of actions would help build capacity to facilitate members' access to investment funds? Not a poll, actually, but an open word cloud. So feel free to type in whatever you think would help build capacity. Expert support. I'm also going to guess, based on the response to the previous poll, that perhaps networking opportunities might be helpful. Also, we see training, matchmaking with investors, as I was just saying, matchmaking or indeed networking. Being able to reach out to the right people and make contact with them is, of course, absolutely essential. Organized meeting with investor and cluster managers, pitching sessions. I don't see one more participant typing. Let's see what else we've got there. So those are all the sorts of things. I think really just getting face-to-face mentoring, the need to integrate the product offered by the cluster with a business model. So I guess making the business case. But a lot of it is really just getting yourself face-to-face with the people, with the money. Obviously, that's obviously one of those very, very key elements. And I'm going to turn over now to our panel debate, the need to educate innovators too. We will talk about that as well on our panel discussion. So I'm going to invite my panelists to switch on their cameras. We're going to hear from Reggie Zamlin, who is joining us from Blue Morpho. He is the CTO at Blue Morpho. We also have Stami Kritas, who is Managing Director at the Council of European Bioregions. Thomas Krogh Jansen is CEO of Copenhagen FinTech and has facilitated a venture fund, so he's going to tell us a bit about that. And Matteo Girardi is also joining us from the Finance Innovation Cluster and is responsible for European projects and sustainable finance. So thank you all very much for joining. Let me see if we can see your lovely faces on the screen on this early Wednesday morning. Thank you very much. Regis, let me start with you. You saw there a lot of the responses from people saying that they want to get better at attracting funding. And one of those big things that they need is to get face-to-face with those who can offer funding. Tell us what has been your experience. Tell us what you're working at Blue Morpho, and what are the potential benefits and the challenges associated with attracting funding.
Yeah, thank you. Thank you very much for having me first. Blue Morpho, we are working very closely with Alpha RLH in Bordeaux, and Alpha RLH is one of our main partner, and we are building with them their investor network. And one of the main advantage of attracting investors for, I would say, for startups is indeed not only money, but also the network, when a company is starting in a very early stage and they find an angel investor, they can be a real mentor, and because the guy has done that before. So that can be really helpful to navigate the company. And later in Series A and Series B, it's more finding the right people, the right CFO, giving the right advice, financial advices. and also building the network, also business-wise. So that's the value of investors, because when you find an investor, there's always a kind of alignment in terms of strategy, because investors, they develop an investment thesis and they will only invest into, let's say, quantum, for example, or space. And then you enter into an ecosystem of companies, an ecosystem of investors. And they will also help you to your next round, because when you initiate the journey with venture capital investors, then you know that you're going to a next round. So it's in their best interest for you to succeed into the next round. So that's all the value and the benefit of, and of course, with this kind of support, you grow much faster, much bigger, and stronger. Now, it's the disadvantage is that you're not alone anymore in the boat. You cannot pivot as fast as you want. You need to convince your board. And the more you will progress into your journey with venture capital investors, the more it will be, there will be dilution, of course, and it will be more difficult for the founders to make sure that they go in the direction that they initially want. So that's a challenge, and in fact, you only find the right investor when you are aligned strategically. I would say that's, in a nutshell, the benefit and the risks of having venture capital investors in your board. Because at the end, what you want is an exit. So you need to be, the founders need to have the right mindset from day one. They must know that the investor is here to buy your company, but to sell it later. So this leverage effect is what they are looking for, and the founders must be in line with this concept.
Thank you, Regis. I think you've nailed a couple of things quite well there, that the bigger you get, perhaps the less agile you get. But also, I think that investors sometimes they bring more than simply the money. They bring also a skills and a mindset that can be helpful. Stami, give us your perspective on the benefits and challenges associated with specific private investors rather than public investors.
Good morning, everyone. Thank you for the invitation. It's always really nice to be part of this kind of conversations across the board of sectors, across sectors and across Europe. I think it's important to understand that when we deal with biotech and life sciences, things are a little bit more complex because the numbers are probably a lot bigger, and there's a little bit more risky for the investors to invest. And the timeline for the exit is a little bit longer. So us clusters in the life sciences obviously have to always sort of educate not only the VCs on this complexity, or this, I shouldn't say complexity, I should say on this difference. But I think it's important to actually educate the innovators as well, because what we see as clusters is we see a lot of people going to VCs unprepared or not ready or not knowing exactly what to ask for. So that sort of creates a little bit more of a gap between the VCs and the innovators. I think us as clusters, we have a role and a presence there to actually facilitate the conversation between the two sides. It's important to have VCs in our ecosystems in order to show them that they have the opportunity to use the clusters to cherry pick really great innovation really early on. And I think as a whole Europe discussion, we should be discussing how not exactly what I think it was mentioned in one of the slides, not just the venture, like the new side, the new knowledge created, but the scaling up as well. We see that there is a lot, especially in the life sciences sector, there is a lot of brain drain leaving Europe, going to the US and actually, growing there. So, but where it started, where Europe has invested a lot into creating that new knowledge. So I think trying to, streamline the process or educate everyone or bring everyone on the table really early on when it comes to innovation and VC to keep even the scaling up here. I think that's something that the clusters definitely know how to do, and they will be the best person to facilitate it.
Thank you, Sammy. I think we're going to come back to a little bit more of that discussion on brain drain and Europe versus the world. Sounds very confrontational, but how to maintain European competitiveness on a global scale and what the clusters could bring to that. Thomas, you've got a rather unique position. Tell us about your experience in facilitating venture funds in Copenhagen.
Yeah, thanks, and thanks for inviting. I think so. We started in 2016, and one of the first things we did was to build this global network of investors to accelerate the ecosystem within fintech, which is our tech vertical. And we now run a network of around 60 to 70 global investors specialized in fintech, right? So that has definitely been one thing that has been quite transformative. I think if you look at the Danish ecosystem as an example, I think 1/3 it's the most funded tech vertical, and 1/3 of early stage investments goes into fintech now in Denmark. And for the case of clusters, we track how many jobs we created through the different companies, quite detailed. So we can see now, since 2016, we created around 5,000 jobs, which in a small country like Denmark is quite substantial. I think when it comes to, at the end of the day, as clusters, I think there's two things that drives economic growth and creates these high scale companies. Is access to risk capital, is access to talent. Talent is a debate for another day, right? So let's save that. And I think what we see still is that access to risk capital, it is a limiting factor. And I think the previous presenter put it very well in some of the numbers here, where I think she said that 11% of pension funds in the US invest in VC, and in Europe it's 4.3. We've actually facilitated a venture fund growing out of Copenhagen fintech. And that's not an easy task. And in many of the conversations, we still meet a lot of pension funds, insurance companies that say, VCs are not part of our strategy. And that you would not see in the US, right? So, and the another problem is that it's not that the money is not there. Obviously, I think there's been a lot here that shows the money is actually there, but one of the problem is also that the allocations into some of these venture funds are just too small. So when they actually then allocate into VC, some of them actually allocate into American or UK-based VCs, right? Because they just cannot allocate that small amount of money into some of the first-time funds, such as ours. So that there's definitely some structural problems in how asset managers, pension funds, they go to this segment. So I think that there's creating high scaling companies. It is giving them access to risk capital in the early stages. I think we're getting there where it looks pretty decent. But still, if you look at, again, our example, if you look at our companies, once they get beyond Series A, 75 to 80% of them bring in foreign investments. And then that comes with another challenge of what you already talked about, the talent or the brain drain, right? Because then, they're more prone to go to US or wherever they attract money from.
Well, this is not unique to this sort of the cluster community. I mean, this issue of scale-ups, you talk to Digital Europe or Business Europe, the big lobbying groups here in Brussels, they say the same thing. One of our issues is we got great startups, it's getting to that next stage. It can be a challenge. Matteo, you're also in the fintech world, but in Paris. Tell us a little bit about what you're thinking about and what your perspective is.
Well, thank you very much, Jennifer, and thank you to the European Cluster Collaboration Platform for the invite. I mean, we do have the same point of views in the one that were shared until now. We are dedicated to digital finance, and obviously we help our members raise private and public funds. Without a doubt, bringing in private funds is one of the key priorities of our members. It's a necessity for them, and then we help them regarding to that. We have several measures that are put into place. We have about 30 to 35 VCs and CVCs that are members of Finance Innovation. They join Finance Innovation because they have an interest into identifying young, innovative companies that they could potentially invest on. Coincidentally, we organize investor committees where we make 5 fintech pitch in front of the investors, and it is happening right now at Finance Innovation. Furthermore, we also have a European project dedicated to investment throughout Europe. It's called FINE, Fintech Investor Network Ecosystem. It's a European fund that is funded by Horizon Europe and whose goal is to interconnect the VC landscape all over Europe for them to co-invest into fintech together. So definitely it is a subject that we have very much in mind, that it is very much important for our members. And to join some elements that were said before, there's several issues that we identified, and one of them is for young startups not knowing how to go talk to a VC, how to value themselves, how to do all of this process. It is a whole language with its codes and everything related to it. And so we organize training. We actually are organizing a training on how to raise private funds with the French Association of Clusters, which gathers all the 50 plus clusters that are represented in France. And so, yeah, through all of these actions, we try to make it easier for French clusters and our members to connect to venture capitals or corporate venture capitals, to raise funds and to be aware of what they can do and what they are worth. And yeah, furthermore, just to add on a point, there is something that we also point out to our startups, which is you don't necessarily want to rush when choosing a VC or someone that is going to invest in your company, because you're going to have to build a relation with those people. And in the long run, it's very much important that you are aligned with their investment thesis or their vision of how things should run. So yeah, in a nutshell, that's what we do at Finance Innovation regarding private investment.
Thank you, Matteo. And indeed, I will come back to this question about building a sort of sustainable longer-term relationship in a moment. But I think we're pushing an open door when we discuss the benefits and the overall framework on the importance of attracting venture capital. But based on our Slido, our very unscientific Slido poll and our questions there, it seems to me that a lot of those who are joining us today is they're concerned, how do you get in front of a potential funder? How do you actually make those connections in the first place? So Reggie, let me ask you, how can clusters find those investors and build that network? Is it just going to events? Is it joining webinars and talking to their fellow clusters? What would you say is the best advice you could give to people in terms of making that initial connection?
For clusters, so we have been working on that with Alpha RLH since 2008. And initially, we started with a small amount of investors. And now today and next week, we will have the Info Venture Summit on the 24th and 25th of October. And that's about 150 people in the same room with about 100 investors, 50 startups. And that's really a long-term work that we did here. And I think one of the reasons why it has been successful is because we started with a very strong focus. We just mentioned that, Thomas just mentioned that they have built a network of 60 to 70 venture capital investors, but in fintech. Actually, the venture capital market, because if we have to talk about a market here, it's not uniform, so you have to segment it. Like any kind of market, you need to segment your market. And for Bordeaux and for Alpha RLH, we started with photonics. We said, okay, we want to invest in photonics. That was the name of the event at the beginning that contracted into info later when we opened to deep tech. Because Alpha RLH became larger, the region became larger, then the companies in the area were less homogeneous. There were less pure photonics companies. And we started to invite deep tech investors. So I think this is really key to start a network of investors for a cluster. You have to identify your strengths and market these strengths and focus on these strengths. Stami just mentioned biotech. That can be a focus. If you look, for example, in Odense, again in Denmark, they have worked a lot on robotics. And because they had this big success with universal robotics, and thanks to this success, the founder became a kind of attracted talents, attracted investors around him. That's a little bit the Silicon Valley style. In fact, the people who have been successful in the Silicon Valley, they believe in tech and they reinvest their wealth in tech. It's not, if you go in a place in the world where there's a lot of money, maybe they won't just invest in tech because they didn't make their money in tech. They don't believe in that. We are in a system of belief. So again, if I go back to Odense, they had this successful exit with Universal Robot, and they've built the strengths of the region around this success. And today, Odense is one big hub of robotics, and every year you have a huge concentration of investors who do believe in this kind of technology. In Grenoble, it's a semiconductor with SOI Tech, which was driving this success. So I would say that to successfully attract investors, you need to focus, just like a startup. You need to focus, you need to understand the VC market and identify the VCs who have the same strategy, the same vision, and the same investment thesis. And then gather them, invite them, and build a nice program, show them that you have marvelous startups, prepare them, and if the show is good, they will come back. And that's really, very humbly, what we, Blue Morpho, bring to the party. We build this, let's say, editorial content around the deep tech world in Bordeaux. And that's what makes the InfoVenture Summit successful every 2 years.
Thanks, Reggie. I mean, of course, clusters are not all on deep tech. We've got clusters focusing on various different sectors. And I remind people that you can put your comments in the chat or your questions in the Q&A if you want to tell us what your particular cluster is working on. But Stami, what's your experience in this, in, perhaps building on what Reggie says about creating these communities where together you can perform this actual knowledge base that really sells itself without having to do all the heavy lifting to potential investors?
I think I really liked what Reggie said. If the show is good, they'll come back. I think that's very, very important, that you need one success story in a small local ecosystem to actually attract. But before getting there, I think knowing a little bit the life sciences clusters across Europe who are members of CIBER, they all do annual events. They all invite the investors. They all do pitching competitions for their startups or their scale-ups, depending on what the focus is. I think sometimes we need to, in a sort of higher discussion, to actually convince or notify the VCs that it's not just Cambridge that has excellence. There are all these regional clusters or regional innovation ecosystems across Europe that might not be well known for something, but they will be finding excellence. And I think it's back to us clusters to actually put that forward. Starting small, just by getting to know your local VCs and sort of try to do pitching, scouting innovation actions. The clusters can organize that for the local VCs in the area. And then because the local VCs will probably co-invest with bigger VCs, they will attract the bigger VCs as well. And then it's so on. It's sort of a cascade effect. But I think if we all try and utilize the knowledge that clusters have, because I firmly believe that, and this is what we're here to discuss, clusters have the knowledge. They know what their members are capable of. They know what their capabilities are. So clusters can actually showcase to the investors where to look, and that will save time for the investors. That will save money. It will save them going through numerous of pitch decks. And on the other hand, clusters have the responsibility to, as Reggie said, to actually prepare the innovators. And when we're talking to life sciences, because, for example, the regulatory frameworks, when we're talking about medical devices or AI Act, all of that makes things a little bit more complicated. So clusters can be there to simplify the language, have a common language across the board, and then the investments will come and excellence and growth will come, I'm sure. And just to say something else, sorry, just another thought. I think it's to us to actually try and attract overseas investment in Europe as well. That's important. We are focusing a lot into European funds, and of course creating funds through pensions and the funds, like Thomas said, is great, will be great. But attracting outside investment into Europe, I think that's an interesting case too.
It's something I think that many in Europe would welcome. But it's quite a challenge. So Thomas, I'd like to ask you about some of those external factors, not about the skills and about the knowing your cluster, but things like tax incentives, grants, subsidies. And I know they vary from place to place in Europe, but do you think these outside elements can be helpful to attracting venture capital?
Oh, definitely. And mind you, I just wanted to add one thing, because I think the business case for clusters are quite clear, right? Why investors should come to clusters. If you look at the research, and I think there's probably multiple sources, but some of it is showing that those specialized clusters that we are talking about here, whether it's robotics, and that's an excellent example, or biotech or fintech, there's a lot of research showing that those clusters create more high scaling companies, global frontier companies, whatever you call them. So for investors, specialized clusters should be a no-brainer. You should go there and you should source your deals from these specialized clusters, because everything shows that there's a good business case. You cannot look at it as, I think the whole funding environment, or it's an ecosystem. It needs to be looked at as an ecosystem. There's soft money, there's tax incentives, there's VC, there's business angels, private equity, of course. So you need to have that ecosystem, diverse ecosystem of different sources, and you need to educate your cluster companies around what are the right ways to go. It's not always, VC is not the answer to everything. There's a lot of companies that shouldn't go the VC way. There's a lot of, so it's also, I think, it's educating the investors around what they can, finding the optimal match with the companies. But it's also having deep dive conversations with the companies around, are they actually right for VCs? Or, what are the right growth journey for them? Not every company needs to be a global scaling company. So I think it's around, mapping out that ecosystem, working with the different players, and the clusters are optimally positioned to be the matchmaker and to make sure the VCs meet the right companies and the companies meet the right investors. I don't know if that answered your question, but
it's a really good, and I see Stanley agrees, it's a really good point. And I think sometimes it's a little bit that we feel like everything has to be sold, everything has to be upscaled, but sometimes good enough is good enough. Matteo, give us your perspective on this. These outside factors, is everyone chasing the same money, or is everyone trying to take advantage of the same levers? And do clusters or businesses within clusters need to differentiate themselves more and decide what's the right path for them? Just building on what Thomas has said.
Yeah, no, great point on Thomas, and actually something that we wanted to point out is that the main role of clusters is about connections and is about building a network. And on our side, both VCs and CVCs are members, but mainly companies. We have more than 600 members. There's about 30 VCs, CVCs. The rest is companies. So big part of our job is to talk to the VCs, talk to the CVCs, say, okay, what are you interested in investing? What type of company, what stage, and so on. And also at the same time, talk to our companies and coach them and learn, okay, are you trying to raise funds? Do you want to raise dilutive, non-dilutive? How do you want to go? Is there certain VCs that you're targeting because of the investment philosophies and so on? So obviously, our role is to guide those companies to manage an ecosystem and to try to be an interconnector between all the stakeholders. So and as said, sometimes some companies of ours clearly tell us we don't want to raise funds. We are running on on our own funds, and we are going to be able to manage without raising any money. We don't want anyone from outside stepping into our activity, and that's great. Not everybody needs to raise money. It does feel in certain ecosystems sometimes that everybody is chasing the same the same money. The main thing that most VCs tell us is that they are overwhelmed with startups wanting to pitch them their solution and try to get their attention. So sometimes the best advice for companies is to focus on what you are looking for, not try to talk to all of the VCs that are in Paris or in Europe. It's a small ecosystem. Everybody knows each other at some point. So yeah, just take your time and try to do it the right way. And just to add on the previous question, obviously tax incentive grants are a huge aspect of where VCs, CVCs, and private equity firms are going to be based. The financial place of Paris has definitely seen that post-Brexit, and other places in Europe. I'm thinking about Frankfurt as well. So it is undoubtedly financial incentives and overall a political and economical ecosystem that allows for investment is something that will attract private financing.
Well, I'd like to move on and sort of do a round, Reggie, starting with you on the question of sustainable ongoing relationships with funders. We've talked about attracting funders. We've talked about maybe how you sell yourself or how you sell the idea of knowledge. But what about the importance of it being a long-term relationship? Presumably that starts at the outset, but how does that continue into the mid phase and the ongoing phase of operations?
Is it for me or for Rezi? Sorry, I didn't get
Matteo,
that.
if you want to jump in, I was directing it to Reggio because I was
Oh.
going to get everyone to talk about this. But if you want to jump in, feel free, Matteo.
Well, I'll just say a couple of words real fast and pass it to Regi. Companies that get private investment are going to have to deal with their investors for the whole duration of their company until they exit or something else. So obviously building a healthy relationship with your investors is primordial. It's key. Without that, it will be very complicated. And you need to have a good relationship with your investor because this investor has a network. It will present you to other financial actors. It will help you raise your Series A, Series B, and so on. And an investor is also a mentor. He'll guide you in the right direction, tell you how to do certain things or how not to do certain things. So having a healthy relation with your private investor is definitely key.
Reggie, same question to you because you alluded to it in your opening remarks about the bigger you get, perhaps the less agile you are, or that things take a bit longer. How important is that ongoing relationship, that sustainability factor? And what happens if you want to pivot, for example?
Yeah, the best advice that I could give to a company who wants to have a healthy relationship with investors in the board is not to have too many in the board. Because it's like you are a small business, but with a reporting which is as large as a big company. Because they will ask a lot of reporting, they will ask a lot of things, and you will spend a lot of time managing your board and trying to align the board all together. So to have a sustainable relationship, if you can manage to pull a round of funding without too many investors, I would say less than 6, it would be better. I think that helps to maintain a good relationship. Another point that I wanted to say, which is not completely related, is that not all companies are, because Matteo mentioned that some companies don't want to raise funds, but there are also the kind of companies which are looking for funds, but are not a good fit for venture capital. because very often we say, okay, the investors, they don't understand, we don't have access to enough money. But there's also not so many companies which are a good fit for venture capital, because they are looking for unicorns. They are unicorn hunters. They are not looking for companies which are going to make a few millions in a couple of years. They're looking for 10, 20, 100 million. So when the market is too small, when the growth is not fast enough, when the differentiation is not big enough, then you are not VC material. And I think that's also a great advice that can give a cluster to a company and say, okay, don't waste time with venture capital. That's not how you have built your company. You don't have the right mindset to do that. And let's move to other instruments. Because we are into this kind of innovation stuff, we think that the right and the only way is venture capital. But I can tell you that I've been, in the last couple of weeks, I've seen some very innovative projects, but the market is 200 million or 400 million in the world. And that's definitely not enough to motivate a venture capital investor. So yeah, I think that's a little bit different from your question with sustainable relationship with your investors, but I think it was interesting to mention as well.
And I think it's useful to bring it back to the added value of a cluster, because having those clusters helps you to actually find your place in the world, as it were. And Stami, I see you mentioned in the chat the European Investment Council Accelerator. Tell us a bit about where you are matters. When we talk about VC, we talk about attracting investment from outside of Europe. What about the ecosystem within Europe, and how important is it that there's, if you like, a culture fit?
Well, I think in Europe, we need to start taking a little bit more risk. I mean, I say that coming from Australia, so it's a little bit of an outsider view looking in. I think we need to start taking a little bit more risk when it comes to innovation and how we can support it. Just a few points back to what the previous speaker said. I think to talk about sustainable relationships between VCs and clusters, we have to start the conversation about what is a sustainable, or how do we have sustainable clusters. But that's sort of a question out there, you know, try to create another or start another conversation in another day because it's really important. We're talking about how important clusters are in facilitating this conversation. But to do that, we need clusters. And how do we have them and make them sustainable and make them, you know, to support them to do what they're meant to do or what they want to do? That's a conversation for another point. And I see Thomas raising his hand. So either it says he agrees or not, I'm not sure. So that's one point. The other point is that I think what Reggie said just before is important too. There is not just VCs. I think clusters can actually start from their own ecosystems and build relationships when it comes to even financial institutions and banks, and try to support, you know, re-educate them and open their mind about creating new instruments that can help the smaller players who are not fit for a VC. We can support, obviously, clusters. The European Commission or Europe as a whole has invested a lot of money and a lot of experience into creating tools like the EIC Accelerator or the EIC Pathfinder and Transition, in order to take university or to do the technology transfer pathway from the universities and the research institutes into the market, which is something that we all want to support as well. So there are tools and the instruments are there. It's just a little bit of fine tuning for the clusters to realize exactly what their members need, guide them, and of course, to actually create sustainable relationships, we have to invite the VCs all the time, be part of the program of the cluster. So it's not just for the pitching days, look, come, we'll show you 10 startups and you take your pick, but involve them into the trainings, into the mentoring. Try to actually have them in all your actions in order to understand the value that the cluster has, and in order for them to recognize that sometimes it's not just the pitch deck, it's a little bit further. You need to sort of dig a little bit further to actually really understand where the innovation is in order for you to make a great deal, but to actually support innovation as well. Because VCs, if I was a VC, I mean, I would do it for the social impact, yes, but ultimately I want to have a return on my investment. So I think, you know, you sort of have to involve the VCs and the innovators into the same table again and again and again, and eventually there will be this culture change and this mind shift towards the right direction.
Thomas, I was coming to you anyway, but you're actually in the position of being our wrap-up speaker for the panel because we're pretty much out of time. So what you were going to say, by all means, but also give us a final takeaway.
Because I think there was a very crucial point being made here also, how at least that's how I heard it, like how do the clusters also build a business model here that is sustainable around this, right? And I think ultimately clusters need to find out how do we productize what it is that is being done here and where is the value lying, and then also figure out what's the business model here. And I think that's a really important point that we don't necessarily have time to discuss right now, but there's definitely some learnings here. And then I think another one that also is quite important here is, and especially coming from a smaller ecosystem, you know, what investors understanding what investors or VCs value is deal flow and quality deal flow. And I think one of the early realizations in our ecosystem is that is just not available in the amounts in a small ecosystem. So what do we do then in order to keep those long-term relations and have those, you know, giving the investors those benefits? And I think that goes back to also thinking, and when we're talking One Europe, you know, we facilitate a lot of investor dialogues and introductions to startups from outside of Denmark, because that's a way of keeping the relationship with the investors. It's a way of benefiting other startups. Does it like work with a business model? Not yet, but it fulfills the purpose of having consistency and long-term relationship with investors. And I think that is also something that, you know, probably where clusters tend to be a little bit more too focused on their domestic market. But I think in a lot of cases, we really need to expand and look at it as One Europe. So I think one of our early learnings was, we need to go at least on a Nordic level and sometimes also on a European level in order to keep those relations and keep that quality deal flow.
Once again, I think you're probably channeling Mario Draghi there in that recent report about being competitive and being a bit more cohesive in Europe. Thank you all very much. The time has flown. I know we could talk about this quite a bit longer, and we haven't had many questions today, but of course, as a reminder to everyone and to those who weren't able to join today, do tell your colleagues today's conversation is going to be available on the European Cluster Collaboration platform, recorded for people to check in whenever they want. So thank you all very, very much. I'm going to hand over the floor now once again back to Angela to tell us about the funding opportunities.
Yeah, hello again, and thank you for this very interesting debate indeed. Well, we are going to start with these non-thematic development actions by SMEs. Projects must contribute to the following outcomes. It will be innovative and cost-effective defense solutions, increased involvement of SMEs in the European defense ecosystem, application of groundbreaking technologies, potential for future market creation, and strengthened European defense supply chains. This is published as always on the EU funding and tender portals, and the deadline is 5th November. We have an open call with open topic. This is for proposals that leverage Copernicus data, services, and technologies to enhance disaster risk reduction. And the proposal should address innovative answers, public engagement, and demonstration and validation. The deadline for this call is 20 November this year. And we have also digital tools for CSP and solar thermal plants. This call aims to promote sustainable, secure, and competitive energy supply. And the expected impacts are leadership in renewable technologies, energy security, environmental sustainability, and job creation. In this time, the deadline is for February 2025. And we want also to inform it has been published a new call for Euroclusters for Europe's recovery. This call focuses on reinforcing innovation and adoption of new technologies and the emphasis on value change. The call is divided into strands. We have strand 1 focusing on net zero technologies and strand 2 covering value chains not covered in strand 1. The number of projects this time will be 16, minimum 8 projects from strand 1, and we have 42 million budgets. The deadline is 5 February. Main objective for this call is to support innovation and adoption of new processes and advanced technologies for strategic autonomy, build capacity, and reinforce transformation into a greener, more digital and resilient economy. And secondary supporting objectives are to establish networks and strategic partnerships, to provide training to foster skilling and reskilling, and to go international. Please save the date. There is an informative session on 14 November. It will be online, and we are providing you the link for connection on the chats and also on the presentation slides. Just to finish, we still have some open calls for Euroclusters from the previous call. Friend, CCI, Gemstone, Ingenious, Resist, and Cilio, and you can check all the information on the open on the European platform website, as always. Thank you very much.
Thank you. And of course, as always, you can continue the discussion on the LinkedIn group, the European Cluster Collaboration Platform. Register for the next talks. The next big one is on leveraging generative AI for regional competitiveness. That's taking place as part of the EU Regions Week, so a particularly big event there on the 30th of October. The next Wednesday morning talks are on 13th and 27th of November, the 4th, 11th, and 18th of December on innovation procurement, transition pathway for metals, smart specialization, green transition, and then before everyone breaks up for the holidays, we will talk again about state aid. And finally, of course, there are lots of social media channels available to you to use, but do use the hashtag EU Clusters Talk or hashtag ECCP to ensure that you're talking to everyone in the community and that everyone can find you to join in the conversation. Thank you all so much for joining us on what is now a very sunny morning in Brussels. I hope you have a great Wednesday and talk to you next time. Take care. Bye-bye.